announcing the arrival of the Honourable Dato'Seri Anwar Ibrahim, Prime Minister of Malaysia. Ladies and gentlemen, Assalamu alaikum, Salam Madani, and a very good morning. My name is Izana Wan Ahmad from HSBC, and I will be your MC for today. Here with Bursa Malaysia, the stock exchange, together in collaboration with CIMB Group and HSBC, we're pleased to welcome you to Invest Malaysia in London. In this installment of Invest Malaysia, Malaysia's economic resurgence driving ASEAN's growth, we look forward to hearing from the Honourable Dato'Seri Anwar Ibrahim in his keynote address on Malaysia's pivotal role holding ASEAN chairmanship this year, and how Malaysia continues to implement the Economy Madani framework, advancing commitment towards growth and sustainability agenda. To commence our agenda, it gives me great pleasure to invite Chairman of Bursa Malaysia, Tan Sri Abdul Wahid Umar, to deliver his welcoming speech. Tan Sri.
Thank you, Zana. Bismillahirrahmanirrahim. The Honourable Prime Minister of Malaysia, Dato'Seri Anwar bin Ibrahim, Honourable Ministers, Tengku Zafrul, Dr. Zamri, and Johan, High Commissioner Zachary, Treasury Secretary General Johan, Merican, Central Bank Governor Rasheed, Ghaffour, partners of Invest Malaysia London, CIMB Group, and HSBC Malaysia, esteemed guests, captains of industry, fund managers and institutional investors, members of the media, ladies and gentlemen, Assalamu alaikum and a very good morning. Welcome to Invest Malaysia London 2025, the first installment in this year's Invest Malaysia series. Now, over the past 2 decades, Bursa Malaysia has hosted some 59 Invest Malaysia away programs in major financial centers of the world to showcase Malaysia's strong value proposition and its attractiveness to global investors. London, as a global financial center and home to global fund managers, is the natural choice to kick off our investment series. And we are indeed privileged to have our Prime Minister to share with us Malaysia's latest growth story and economic resurgence that is in part fueling ASEAN's growth. Thank you, Prime Minister, for making it here today en route to your trip to Brussels and later to Davos. Ladies and gentlemen, 2024 was indeed a good year for the Malaysian equity capital market. The benchmark index, the FTSE Bursa Malaysia KLCI, gained 12.9% in 2024, making Bursa Malaysia one of the best performing markets in ASEAN. And this resulted in our overall market capitalization to surpass the 2 trillion ringgit mark from May 2024. The market has been very active, with average daily trading value of 3.15 billion ringgit from 2.06 billion ringgit in 2023, with foreign investors contributing 36% to our total trade. And Bursa Malaysia is the leading stock exchange for IPOs in ASEAN, with 55 new listings and raising some $1.65 billion, ahead of IDX at $899 million, and Stock Exchange of Thailand at $811 million. So both in terms of total number and value of amounts raised. And this amount has not been seen since 2006, during which year we saw some 40 listings in Malaysia. So what are the key factors influencing such good performance? Well, I must say there are multiple factors, but please allow me to highlight 3 of them. Firstly is the favorable macroeconomic environment in Malaysia, with real GDP growth of 5.2% for the first 9 months of 2024, while inflation is contained within 2%. Now, this was very much driven by the Malaysian government's Madani economic framework, supported by key policies such as the National Energy Transition Roadmap, the New Industrial Master Plan 2030, and the National Semiconductor strategy, among others. So we're talking about not just a plan, but followed up by real execution. Now, second is the continued strong trade performance, with total trade in the first 11 months of 2024 rising 8.7% to 2.62 trillion ringgit, and continued trade surplus of 118 billion ringgit. Now, I must say that Malaysia's current account surplus for the first 9 months of 2024 was sustained at 21.4 billion ringgit, representing 1.8% of GDP. And the third factor is the strong encouragement by the government for government-linked investment companies and other investors to prioritize domestic investments, which generate not only good financial returns, but I think more importantly, will also create business and employment opportunities in the country. Now, such positive factors, plus other external factors, such as the previously anticipated lowering of US interest rates, have resulted in Malaysian ringgit strengthening against the US dollar by some 2.7% to 4.47 level at the end of 2024. And that enabled ringgit to emerge as Asia's best performing currency in 2024. Now, the growing confidence is also reflected in the increased approved private investments for the first 9 months of 2024, reaching 255 billion ringgit. That's 10.9% higher compared to the previous period. Now, whilst we have made significant domestic tailwinds supported by economic fundamentals, Malaysia obviously is also not spared from the external headwinds brought about in particular by uncertainties over the US trade policy and tariff measures under Trump 2.0. Now, this has partly contributed to the relatively muted start to 2025, with the FBM KLCI down by 4.9% to 1,562 points yesterday. And this naturally provides, I would say, buying opportunity given the strong fundamentals as the government's policies and reforms take root and continue to deliver results. And we believe that our Malaysian equity and debt capital market to the tune of 4+ trillion ringgit is very much well positioned to support Malaysia's growth and ensure businesses and investors are able to leverage and benefit from this growth. Ladies and gentlemen, wearing my Bursa Malaysia hat, if I may, investing in Malaysia is more than just about investment opportunities. It is also about the quality and confidence behind how these opportunities are delivered and sustained. Our PLC transformation program seeks to drive a higher standard of performance and competitiveness amongst listed companies, ensuring that their growth is aligned with best practices, environmental stewardship, and the highest standard of corporate governance. As a progressive multi-asset exchange, we continue to spearhead innovative initiatives and widen market accessibility. And some of these notable initiatives include, among others, the world's first Sharia-compliant carbon exchange, the centralized sustainability intelligence platform, and the Bursa Gold Dinar, all of which will launch in 2024. And as Malaysia assumes the ASEAN chair for 2025, on our part at the exchange, we will strengthen regional collaborations and enhance linkages with bosses and the ecosystem across ASEAN, particularly through initiatives like the ASEAN Interconnected Sustainability Initiative ecosystem and the ASEAN Common Carbon Framework, or ACCF, to further boost the region's attractiveness and resilience. Ladies and gentlemen, back to today's program. Over the course of today, we will get the opportunity to better evaluate the cornerstones of Malaysia's economic progress and the opportunities that can be built upon it. We will begin with a keynote address by the Honourable Prime Minister, who will share his vision of Malaysia's economic future as outlined in the Madani Economy Framework and its reform agenda, as well as discuss opportunities and plans under Malaysia's chairmanship of ASEAN this year. The Prime Minister has also kindly agreed to take questions from the floor in a session to be moderated by our CEO, Dato'Omar. And this will be followed by a conversation with Minister Tengku Zafrul, who will, among others, share insights into Malaysia's semiconductor industry and its approach to balancing East-West trade relationships. And this conversation will be moderated by HSBC Malaysia CEO Umar, Siddiq. And we'll then hear from Treasury Secretary Datuk Johan Merican and Central Bank Governor Rasheed Ghaffour on the country's fiscal and monetary policies, as well as reforms that enhance Malaysia's attractiveness as a worthy and investment-friendly destination. And this session would be moderated by Michelle Chia, who's the CIMB Group's wholesale banking head. Distinguished guests, ladies and gentlemen, without further ado, it gives me great pleasure to invite the Honourable Prime Minister Dato'Seri Anwar Ibrahim to deliver his keynote address. Dato'Seri.
Terima kasih, Tuan Sri Umar, fellow ministers, ladies and gentlemen. My first 6 months, which is very relevant to the UK experience in office, was a baptism of fire. We had to endure the strong opposition at that time with a very strong race, religious narrative. To be polite, but actually racism and religious bigotry. But I think with political stability and a focus on policies that would affect change, focusing on the economy, we are able to weather the storm, and now we are politically very stable. We use that stability to introduce reforms in the country. And clarity of policies is, to me, very fundamental. That includes the Industrial Master Plan, or the Energy Transition Roadmap, or Semiconductor Strategy, and a number of various other policies that would be able to spearhead the new direction for the country. Now, having said that, the challenge, of course, an effective implementation of such programs. So there must be commitment for administrative or civil service reform, Fiscal Responsibility Act in place, because continuous deficit is no longer tenable as a economic policy. So I think we have passed that stage now. And we have built camaraderie, friendship, and strong bonds within ASEAN. So once I assume the chairmanship of ASEAN, things becomes very easy, because we're dealing with not only leaders in neighboring countries, but strong, trusted friends. And that's why, as you alluded to earlier, ASEAN places its focus on ASEAN energy grid, which covers from Laos, Thailand, Malaysia, Singapore, up to Sarawak, Indonesia, and covering countries, most of our countries. Then we have programs, new policies, approaches with neighbors like Johor, Singapore Economic Zone, to ensure that we both benefit from this new dynamism and propel this area in the south of Peninsula to Singapore, and of course covering areas surrounding Singapore, which includes Indonesia. In the north of Malaya, because there's somewhat a problem with Myanmar and also minor skirmishes in South Thailand, we embarked on this series of discussions with the Thai authorities to ensure that peace is stabilized by focusing on economic development to the poorer sub-regions in the south of Thailand and in the north of Malaya. Why I'm sharing with you here, because these are the stark new realities, focusing on economy and focusing on the making Malaysia as an attractive destination for investments and making all the necessary changes or policy changes to ensure that we can sustain this policy. But beyond this, we are talking about region. ASEAN remains, is considered to be one of the most peaceful sub-regions in the world. 700 million people. And fastest growing economy in the world. We have absolutely no serious issues with our neighbors. I mean, yes, there is this outstanding issue with Myanmar, but the ASEAN consensus is there. Yes, we have to resolve, but based on certain principles, the 5-point consensus. And we are engaging with the Myanmar authorities now, both the junta and the opposition. So I think that is the position that we take. Then we have to move. We are fortunate, as you have heard. I don't intend to read and give you more details because of the governor here, Secretary General of Treasury here, meeting minister and the ministers here. That's their job. If I start giving all these details, they will be irrelevant after this. And most of the figures are quite known to you. And but beyond that, you see, ASEAN understands that there's limitations. Of course, there's uncertainty. They say unpredictability due to the ascension of Trump as President of the United States. I don't share that view necessarily because finally when leaders assume responsibility, they will cater for the interests of their country and what be of course, immediate benefit, but will require a global sort of undertaking and relations, both economic, trade, and investments. American interests overseas and outside investments is too huge to be ignored. Some policies would require some adjustments for the first few months, for sure. But in my discussions from President of China to leaders in ASEAN to UAE and Saudi Arabia, of course there are concerns, but generally people are still optimistic. It would depend largely to what we do to assuage the condition. For example, Malaysia then takes on this role of building this cohesiveness and integrated network, both digital, interconnection, joint investments, joint position vis-a-vis governance in ASEAN, energy transition, grid, energy, and also the ASEAN energy grid. But at the same time, we explore new areas. Cumulatively, United States is number one investor into Malaysia, but we are probing then into areas and with China, new areas. And we focus on, of course, data centers, AI, etc. But we also having this sort of arrangement with the Gulf states. So there will be in May, end of May, for example, ASEAN GCC conference, which is interesting. We're exploring new avenues, new markets, new trading partners beyond just the West, United States, Europe, China, but also the GCC in a very meaningful manner. And this is quite unique in terms of our decision to then collaborate with the GCC and having focus on energy, on digital, on trade and investments. I had a very useful, fruitful session with Prime Minister Utama yesterday, number 10, and of course to thank him because UK has agreed with the CPTPP partnership, which of course unlocks the access to key markets for Malaysian exports, including palm oil, rubber, and timber. And that sort of arrangement would help in our potential negotiations with the EU, with the main focus to use this to encourage more trade investments and free flow of its products. And we, of course, agreed to proceed with and enhance relations with the countries in the South, we call it Global South, including the BRIC nations, so that we remain close with our traditional allies in the West, United States, Europe, and opening new avenues with China, India, Australia, and through BRICS, extend that sort of relations with Africa, Latin America, and Russia. So purely the focus is business, investments, and trade. And finally, contrary to many assertions about the unresolved, contentious issues in the Palestine-Israeli conflict, we are at least relieved that there is that pace of progress, which was, again, able to be resolved, okay, partly by President Biden's initial efforts, but certainly with the firmness and resolution on the part of the incoming President Trump. I did discuss with Steve Witkoff in Abu Dhabi, who is the designated chief for the Trump administration in the Middle East, who said, contrary to the past assertions, they will have to, of course, deal with Israel and the Palestinian authorities and Hamas. Because what we are able to need to do is, to, of course, to resolve the conflict. And you must then engage with stakeholders, but impose the terms, naturally. Why I'm referring to this? Because that would mean that we are not distracted with these contentious issues, secure peace and stability, and get back to our focus and on the economy. So our, again, trajectory has been shaped by embracing innovation, global trade, human capital development. So back to business. So thank you very much.
Thank you, Honourable Prime Minister. If you could please have a seat for the Q&A session. I'd also like to invite Datuk Muhammad Umar Swift, Chief Executive Officer of Bursa Malaysia, who will be moderating the session. Thank you.
A very good morning, Honourable Prime Minister, and thank you for your time this morning. The Prime Minister has nicely framed the resurgence of Malaysia, political stability, economic growth. It will be above 5% for 2024, and as we look into 2025, we're looking again to be north of 5%, driven by technology, driven by healthcare, driven by political stability and fiscal responsibility. And the Prime Minister has nicely framed that. Now, I am mindful of the time. We're not here to hear me, but we'd love to engage all of you on the floor regarding areas of interest. Of course, we have Tengku Zafrul, who will be talking about trade. Fiscal responsibility will be, of course, Governor, as well as the Secretary General, Dr. Johan, of Ministry of Finance shortly. But if I may, microphones are available. Ask your most difficult questions to my Honourable Prime Minister.
I'd love to ask you one more. James Johnson from Red Wheel. I lived in Singapore 20 years ago, and we had the first iteration of the causeway relations in Iskandar. We all got very excited and nearly bought a house in Johor Bahru. This one looks more sustainable. Can you just talk us through what your long-term vision is for the relationship between Malaysia and Singapore, how this brings benefits to both countries, and how you see it developing on a 5, 10, 20-year basis? Thank you very much.
Sir. It's not as, our relationship with Singapore is not as precarious with the United States and Canada. So that's a good news. Of course, with all neighbors, particularly because Singapore was part of Malaysia initially, you know. So there are some of those in the first generation, the elder generation, have that phobia, okay? But we are fortunate that both the leadership in Malaysia and Singapore are more pragmatic. wants both countries to succeed. Singapore has its strength, but also limitations in terms of space. Malaysia has its strength, but of course in some areas we're second to Singapore. So we would then, a few measures, including the financial zone, and then now Johor, Singapore Economic Zone, which would then be an initiative to prepare both countries. It's not the traditional conventional thinking of Singapore as the center of growth and Johor, Malaysia as hinterland is no more. That was the thinking with the last 3-4 decades. Now it's a joint effort in new areas, energy, green energy, in digital or AI, and basically those issues. Of course, NVIDIA plays major facility there, which will benefit immensely both Malaysia and Singapore. So I think that is the thinking. I had this long session with Prime Minister Lawrence Wong last few weeks in Kuala Lumpur. And I think that the thinking, the forward-looking views, positive in terms of bring both countries together to succeed. And it's not, as I said, it's very, very important to realize that we would then place specific measures and encourage industries to move. In fact, not only for Singapore, but from the region, there's a lot of interest, and that has placed their interest and has come in to this zone. They were there, as Iskandar, etc., but now with clarity of policies, and the central government and the state authorities with Singapore government coming in, they will give this added confidence to the initiative.
At the back of the hall, if you could introduce yourself, please.
Hello, thank you for the presentation. My name is Cristina Titu from Jefferies. My question is about balancing the fine act of fiscal deficit and the economic growth. If you could perhaps let us know how Malaysia planned to balance the fiscal discipline with economic growth, but in the same time with the equitable wealth distribution under the Madani framework. Thank you.
It was a very difficult, delicate balance, of course. Fiscal discipline is a prerequisite because we have lost a lot of many years and opportunities because of excesses in the system. Fiscal discipline means transparent tender process, which is a major problem in many countries. And fiscal discipline means knowing the limits of fiscal expenditure and not continue to drag the country down with huge deficits. Ours is not huge economy, therefore, when we started with 5.6% deficit, we are now able to, this year, to reduce to 4%. And not to continue to be so dependent on new loans. So we have to gradually reduce. Now, but at the same time, we have a responsibility. We can't have a country propelling economic growth and still having these pockets of poverty and abject poverty, but whether it's urban poor or the rural and certainly the hinterland. So there must be clear policies on poverty alleviation. To me, it's inexcusable. Whatever one may say, but to have a country to ignore the plight of the very poor with atrocious living conditions is not acceptable. But there is a limit what we can do, and gradually, in years to come. But if you can really reduce leakages and waste, it's a major feat. Through proper, transparent tender process, through effective policies, and now, of course, we're embarking on this using AI, for example, to be able to monitor the effectiveness of some of these programs. Then we can use these resources to really help. You see, Malaysia spends most, I think, compared relative to ASEAN countries, Asian countries, in terms of subsidy for the poor, right? Sometimes ridiculous amounts. Our subsidy, say electricity or around 95, we subsidize everybody. The richest, of course, the poorest, acceptable. How can you talk about subsidy to the very rich and even foreigners who are, comfortable? And but, affecting change, undertaking this reform must be done, not only expeditiously, but wisely. You see, I've seen many countries trying to effect radical reform and causing political disaster. So economic prescriptions must be taken into account the welfare of the common man and woman. And this is, of course, where I think relevant to your question, we should draw the line. We should do things gradually. It's not adhering the dictates of some of the international players or some potential investors. It has to be, to me, it has to be done. There's no question. You must undertake reform. You must effect change. But it must be done wisely so that the system remains stable and is sustainable in the long run. Sustainability is not only in terms of environment, but also in the system. So we have done so, fortunately, in terms of electricity, and we're embarking on the subsidy for around 95, because the savings, 9, 10, 15 billion ringgit, will be passed through to the poorer segments of the community. But the focus now is, of course, quality education and quality health services in the country, because the vast majority will still be dependent on public health facilities. And to ensure Malaysia succeeds, we must be able to undertake effective radical reform in the educational system. Whether it's language proficiency or digital technology or AI, it has to be done. It has to be done expeditiously, and it cannot rely on the normal pace of education reform we want to talk about here or in many other countries. It must be done at the speed, as you know, during having to deal with the post-normal times. It has to be done now. Thank you.
Thank you, Prime Minister. We have time for one last question. I am mindful of the time. If I could take a question from the floor. Yes?
Hi, good morning. My name is Anwar from Hudson Bay. Thank you so much for coming here today and talking to us about your vision. I just have one question, which I think you kind of touched on a little bit in your previous answer. So when you look at either the semiconductor plan or the infrastructure plan or the energy transition, what do you think you need to do as a country to improve your value proposition of either cost of supply or just the ability to supply in that? What are some of the structural reforms that you need to focus on?
Referring specifically to semiconductor first, right?
Please.
Yes. Now, it is a huge enterprise. As you know, we produce and satisfy the requirements of at least 26% of American and the US import. 26% of US requirement in terms of chips is huge. Semiconductor has been deemed to be a major focus in Malaysia, and we are considered to be the hub of semiconductor in the region. But the challenges, of course, first the ecosystem, ports, airports, highways, education institutions that would fit in. I gave this reference to these massive investments from Infineon from Germany, 6 billion euros. They require not only just engineers, but engineers with certain level of expertise. So our proposal is that why don't Infineon then, as an industry, collaborate directly and train the students in the university? Because they will have the expertise that traditional, conventional university may not have because of the new challenges and technology. So this we'll do. And then, of course, the supply side. There's no point of just producing and not having that supply side in terms of training. So Khazanah and the relevant GLICs have to then refocus to make sure that those who have the capacity should be built. And conditions imposed to these new industries to say that to be effective is not just the ecosystem, which is the responsibility of the government or the host country, but also the supply side, which is the responsibility of both the industry and our private sector players. I think this is, need to be done. I mean, it has been done. To be fair, the funds have been allocated, but I think by this sort of engagement with the industries, they would then come up with some ideas how we can then assist in ensuring that both the ecosystem and the supply side is being handled effectively. And I think that would make that sort of industry relevant. You see, the traditional view of industrialization or in the past is no longer relevant. It's considered to be obsolete because it's a matter of setting up industries and not preparing the national players. And I think now things have changed somewhat. Yes, the investments is critical. The high technology is still there in Europe or United States or China, but we need to make sure that we do take into consideration the national requirements. That's why the focus on training and talent is paramount.
Honourable Prime Minister, our time this morning has come to an end.
You deserve the difficult questions, the other minister.
Thank you for sharing your vision and that sense of urgency that we all feel in driving just transition for Malaysia. If we could have a round of applause, please. Thank you.
We will now continue with another engaging session. So this engagement is on Malaysia as an investment destination, which has attracted opportunities in the semiconductor industry, digital innovation through data centers, and renewable energy, to name a few. We will explore on the global trade tensions, protectionisms, including tariffs, and how Malaysia can benefit or capitalize on this opportunity. For this, allow me to please invite on stage the Honourable Tengku Zafrul Aziz, Minister of Investment, Trade and Industry of Malaysia, to share a brief overview on our policies. Minister?
Okay, Assalamualaikum and a very good morning. It's still morning. Our Governor is here, together our Secretary General of Ministry of Finance. Thank you all. I've been asked to give a short presentation about Malaysia in terms of trade and investment, and we'll have a session moderated by the CEO, Dato'Omar, where is he? He's there, right? So anyway, let me give you a short, brief presentation. I would like to make this an interactive session. Once Omar moderates, and I'll open the floor to the difficult questions. Okay, so this is what the Prime Minister talked about earlier. What is our aspiration? What is economy Madani? In a nutshell, it's about raising the ceiling and also raising the floor. You heard about fiscal policy. Later you heard more about that from Johan, and then from the Governor, we'll be talking a bit about monetary policy. But as a whole, we are trying to ensure that economic growth that we have achieved thus far in the past 2 years is sustained, right? We heard about minimum 5% growth, hopefully this year. Governor, correct me if I'm wrong. But we want to sustain this further because, you know, we have a plan. The plan is to be top 30 largest economies in the world by the year 2030, but more importantly, looking at the productivity, making sure that that growth that we achieve is a growth that's inclusive, a growth that's equitable, a growth that is resilient, of course, a growth that is also sustainable. So this is where we look at all aspects of the economy. So 6 engines of growth, reindustrialization, I'll touch on this later, which is what the Prime Minister touched upon as well, the Industrial Master Plan, talk about the green transition, we had the National Energy Transition Roadmap, talk about technology, Tech Hub, talk about making sure that infrastructure, public service is ready, Talk about consumption growth. As you know, Malaysia's economy is also driven by consumption, and empowering regions, looking at both backward and forward linkages of our companies, mindful of the geopolitics that's happening today. So we dive into trade, investment, and industry. So on investment, you heard Dato'Seri Wahid just now, the Bursa chairman, talked about investment that have been recorded this year. The first 9 months is up nearly 11% on the back of a strong investment numbers the year before. And these are numbers that have been approved and realized. So we're seeing the trajectory going well with us, and to be fair to ASEAN as well. If you look at FDI globally, it's down, but FDI into ASEAN, into countries in ASEAN are actually still in the positive region. Trade, it's tricky with what's anticipated going forward. We'll be announcing our trade figures next week. We'll be surpassing the forecast or the targeted trade numbers that we've announced, so that's positive. But again, what is going to happen in 2025 is another story. We'll see. We can discuss that later. And on industry, these are areas where, again, we want to ensure that when you talk about industries in Malaysia, how can companies, big listed or unlisted, benefit from this? And we've been working very closely with the Khazanah CEO is also here. We're looking at sectors which we feel have the right potential to have that spillover to Malaysia, and tapping all markets, be it private equity all the way to capital markets, to support the growth of local industries together with international companies who are operating in Malaysia. So this is just our network, just to show that we engage all stakeholders. This is to talk a bit about the importance of focusing on execution. I think the Prime Minister mentioned a bit about that. There's no point having big plans like the Madani plan, the 12th Malaysia plan, 13 is coming soon, and then also talking about National Energy Transition Roadmap, talking about National Industrial Master Plan without focusing on the execution. So the Prime Minister himself sits and chairs the National Investment Council. We have been meeting every month, in fact, and we're saying that, look, we can meet once every 2 months. But again, it shows the commitment all the way up to the Prime Minister. We have the Investment and Trade Action Committee, which coordinates this. We have the Green Investment Strategy Steering Committee. We talk about green investments, but we have the Deputy Prime Minister chairing this, which is important because he will then get alignment with all the relevant stakeholders, be it the government or the private sector. And Invest Malaysia is important, where we focus on all those investments that are coming in. We ensure that everyone sits under one roof and have one system we call a on-track system, and this will also be done in other states in Malaysia. The second Invest Malaysia Facilitation Center was announced when we announced Johor Singapore Economic Zone, and also industry, etc. So a lot of committees, I know, but it is important to be open about it, to be transparent about it, and we do report the progress to the public. Sometimes we get into trouble for doing that, but I think it's important to create the accountability. Okay, so that's all. I was asked by the organizer and also by the Secretary General to give a few slides on an update on what we do so far. But I think I'd like to keep this session interactive, so can I invite Dato'Omar to the stage to moderate and open the questions to the floor. Thank you.
Thank you, Minister. Ladies and gentlemen, distinguished guests, good morning. I am delighted to be able to have this conversation with the Investment and Trade and Industry Minister, the Honourable Zafrul Aziz. It has been an eventful time under your watch. We have seen, as outlined in your speech, and as well, of course, in the Prime Minister's speech, that Malaysia has put through a comprehensive, cohesive, and coherent sort of economic plan, and that's been supported by some of the progressive measures that you have done under the ministry that you lead. I think one of the core things that you've done, I think, is obviously the new Industrial Master Plan, NIMP 2030. But before that, just to reflect quickly again on Prime Minister Anwar's Madani economic framework, which essentially is about uplifting income levels through broad-based economic growth and investment, as well as supported by socio-economic and fiscal reforms in a real and meaningful way. Now, you've obviously put through the NIMP as a core policy platform about increasing Malaysia's economic and industrial complexity, increasing the accelerating digitization and technological adoption by industries, and also ensuring economic sustainability through higher wages, better jobs, and of course, environmental stability.
Very good summary.
Sorry?
Very good summary.
Thank you. I've learned, I was paying attention. But also, of course, I think you also have this other sort of set of policies, the National Semiconductor Strategy, the Green Investment Strategy, Circular Economy Policy Framework, etc. For me, the upshot of all of this and the tireless and continuous effort of you, Minister, and your team in engaging investors, stakeholders, and industry is that Malaysia remains a key investment destination for Southeast Asia, if not Asia as a whole. Evidence of this is, for example, in 2023, Malaysia recorded $40 billion in foreign direct investment, and as reported for the first half of 24, about $15 billion US dollars. Now, for the same period, this was matched as well with the mobilization of domestic direct investment to the same amount or more or less. All of this taken together would create tens of thousands of highly skilled and highly paid jobs for Malaysia. Looking forward into 2025, just very quickly, there are headwinds and tailwinds to negotiate. Of course, on the plus side, we have the ASEAN chairmanship for Malaysia. Malaysia is also part of two big FTAs, free trade agreements. One, of course, is the Comprehensive and Progressive Trans-Pacific Partnership, CPTPP, involving 12 countries, including the UK, covering 15% of global GDP. And then, of course, the Regional Comprehensive Economic Partnership, or CEP, covering 15 countries, including China, encompassing potentially 30% of global GDP. Of course, as Prime Minister has alluded, we also have the Johor-Singapore Special Economic Zone. Sorry, before I forget, congratulations also on the Malaysia-UAE FTA that was signed earlier this week. On the other hand, of course, Malaysia as an open economy has to navigate the change in administration in the US and other geopolitical and economic challenges. So very quickly, Minister, if you're okay, I will just sort of try and segment the conversation into a brief first part to talk about your vision and your policy successes, and then quickly then to segue on to 2025. So first question to kick off. You were Finance Minister 2020 to 2022, helping to navigate the country through the COVID pandemic. There was a lot of short-term and medium-term sort of stuff that you had to be worried about. Taking on this role at this new portfolio, it enabled you to perhaps take a more longer-term view of life, being able to look at medium and longer-term strategies. So perhaps what are some of the key priorities that you had coming into the job?
Yeah. Well, I mean, Johan and the governor was working closely. We were working closely together when I was the Minister of Finance, and that was a very difficult period during COVID. But I must say that it was not just a period where you had economic crisis in a way, if you look at the growth of the country at that time. But of course, it's not peculiar to Malaysia. It's a global situation. But for Malaysia, we also had a political instability during that time. We had, over the period, of course, those of you in UK probably had the same experience, but we had 4 prime ministers in 5 years. So as a policymaker, as part of the government, as part of the administration, it was also difficult to navigate that. But today, as what the Prime Minister mentioned, this Madani government has been in government for the last, or slightly over 2 years, and we have managed to achieve those targets, or even surpass some of those targets because of political stability, which allows us to make those difficult decisions. You know, later on, I'm sure the governor will talk about, and Johan will talk about Fiscal Responsibility Act, which are tough, and we talked about some of the subsidies that was recalibrated to focus on those who need. That was not easy. You know, you talk about electricity subsidy, talking about fuel subsidy, diesel in this particular case. So those reforms that's required can be done today. And for me, the role has shifted somewhat, of course, because if you look at GDP growth prior to 97, 98, in fact, prior to the global financial crisis, the investment numbers is around 20% of GDP. Sorry, 40% of GDP. Today is only 20, right? It shows that there's still a lot of room for improvement when it comes to investments and their contribution to GDP. Similarly to trade, slightly, well, not as bad as investment, but slowly that's catching up. For us, you know, I must admit we are a net beneficiary of some of the geopolitical tension that has happened ever since Trump administration, Trump 1.0, and then after that Biden, they continued to have a very strong position when it comes to China. And we've seen companies therefore reacted to that. What did the companies do? They realigned their supply chain, they redesigned their supply chain to make sure their supply chain is more resilient. Of course, at the end of the day, companies look at commercial viability of their own existence. So they will look at Southeast Asia as a region where they can have their +1 strategy, right? It could be China +1, Europe +1, whatever +1, but it shows that companies are relooking. Of course, COVID-19 also taught them about importance of supply chain resiliency and security. So Malaysia is fortunate in that sense that we are seeing that flows. And why are we seeing that flows more than others? We are seeing that flow more than others because it's in the sectors that we have comparative advantage in. Prime Minister talked about semiconductor. That's why we talked about national semiconductor strategy. If you look at our exports, 80% of our total export is from the manufacturing sector, and of which half of that is from the E&E sector, driven by semiconductor. So when you have a trade war, which is a tech war in this multipolar world, right? People talking about bifurcation, whatever.
Bifurcation, yeah.
Yeah. So we are looking at, you know, they are looking at Malaysia because we have that ecosystem already in place, right? Rather than building it again from scratch, we have the ecosystem there. Government incentives, of course, do play a role, but the ecosystem plays a more important role. We have the talent in place. How long has semiconductor been in the sector in Malaysia? It's been since the 1970s. It's been 50 years. Similarly, for when we talk about energy, you know, we have the right energy mix, and going forward, we are going to try and embrace more green energy, but energy is there. Reserve margin is enough to support the growth in the technology sector, which of course consumes a lot of energy. We want to make it more efficient, obviously, but going forward, these are all the important ingredients. And I believe that with the National Master Plan, with the Energy Transition Roadmap, and the various strategy supporting those, and the commitment by the policymakers and the political will that's supporting it, we should be on track to achieve what we want to achieve in the Madani economy framework.
Thank you, Mr. I think you touched on a couple of good points. I think in particular the political stability, enabling the government to make hard choices, to think long term. So in that sense, perhaps if we can just get your views on how the Trade and Industry Ministry, in terms of policy you've chosen to pursue, how does it interlock effectively with the Madani economic framework, and perhaps also to just touch upon what you were saying as well, does the political stability ensure Malaysia's ability to attract FDI continues to remain? Sorry, sir.
Okay, can that be your last question so that I can open?
Yes, of course.
Okay, if we look at when we navigate as a country that has a very much an open economy, trade to GDP today probably in excess of 170%, close to 180 even, depending on the trade numbers that we'll be announcing next week. But it shows how open the economy is. You mentioned CPTPP, you mentioned RCEP. That's just 2 out of 16 bilateral and multilateral FTAs that we have signed. In fact, you also mentioned UAE, that's number 17, will hopefully become, entry into force in the next 2 to 3 months. And we are already, we're going to Brussels, obviously, to start looking at the possibility of resuming discussion with EU as well, FTA, and I'm looking forward to a positive announcement. We're still finalizing that, we've got a few days left. And we also announced that we are now upgrading our ASEAN and China trade FTA, and together in goods and services, similar with India, et cetera, et cetera. So I think it's important that we continue to engage. There is a lot of talks and questions posed to me and of course to the Prime Minister. Are we moving more to the east than the west? We talk about global south, global north. You know, people asking why are we joining BRICS, for example? You know, why are we pivoting more towards the east? To me, the answer is simple. We are not pivoting to anywhere. We have always been engaging every country, every grouping. I mean, ASEAN as a whole believe in this. As we take chairmanship of ASEAN, we want to focus on ASEAN neutrality, ASEAN being non-aligned, and it's important to make sure that ASEAN be together in this. That's why we also a strong proponent of ASEAN centrality. And when you look at, yes, we are talking to countries who are members of BRICS, and in fact, our neighbor Indonesia has just joined as a member of BRICS, and we have, we just visited UAE, as the Prime Minister said, they're also a member of BRICS. But at the same time, as I mentioned, we are members of CPTPP, which includes the UK, which includes some of the members of the West, and we also in negotiations with many other countries on our trade and investment relations. And even during the Biden administration, we are members of IPEF, the Indo-Pacific Economic Framework, we are a member of APEC, et cetera, et cetera. So it shows that we are, country that's non-aligned, but at the same time, engaging all. Why Malaysia have to engage all? If you look at trade and investment, who's our biggest trading partner? It is China. It has been the largest and biggest trading partner for the last 15 years, 15 consecutive years. Right. 18% of our total trade is with China. Right. Of course, second comes US again, but investments is the other way around. You mentioned about the numbers that, on investments that have come in the last 1.5 years, that's close to 2 years, it's the US, right? That is the biggest investment, and second comes China. So we have to navigate this, but at the same time, as chair of ASEAN, we talk about inclusivity and sustainability, which is a theme of ASEAN. We need to increase also trade within ASEAN. Trade in ASEAN is about 23-24%. Hopefully, we can conclude the Digital Economic Framework Agreement, which again will make the growth more inclusive. We've talked about growth, but are we including the SMEs, the micro SMEs, etc.? But back to the point, I think it's important for Malaysia when we design our policies that is relevant to trade, that is relevant to investment, we need to ensure that we engage all parties, and that's what the companies want. There's a lot of news last 2 weeks about restriction on export restriction on certain technology relating to chips. Even semiconductor industry association globally, in Malaysia as well, have concerns. Of course, the only way for us in government is to continue to engage both, in this case, all stakeholders relating to any potential tariff or export restrictions that may affect the companies that are operating in Malaysia and in the region.
Thank you, Minister, for that very sort of comprehensive answer. So perhaps now I can open to the floor the questions. It's in the middle, sorry, again, and then after that, you.
Okay, sorry.
Hi, I'm Kieran Bundan from Schroders. Congratulations on the success so far on the trade and investment side. Could you share some of your best and worst case scenarios in terms of what you're discussing going forward, and what would you put the probability of US tariffs on some Malaysian products in the future?
Yes. Also, best and worst case scenario in relation to the trade tensions that's happening globally rather than what's happening domestically.
Yes, exactly.
Yeah, because domestically there's a lot more I can share with you. There's all these challenges dealing with local councils, utility players, but those are issues I think we can resolve, and obviously it has been resolved despite some of the issues that have been raised. For globally, if you look at the pros, I think I mentioned earlier, companies, be it China-based companies or Europe-based companies, US-based companies, they all have similar motives, right? At the end of the day, they look at their stakeholders. Some of them are obviously fund managers like yourself, to ensure that they get the returns that they want. And to do that, they want to make sure that the supply is resilient and at a reasonable cost. So this region does provide that, and those are some of the good examples. We have the talent pool, we have the right ecosystem for some of the sectors that they are realigning their supply chain. Malaysia benefit, Vietnam benefit, Indonesia, many, depending on which sectors you are talking about. The dangers is about investments going forward, right? There's the demand side, there's the supply side. On the demand side, there are a lot of discussions when I engage multinationals, companies who are supplying to multinationals. They're worried about whether the policies of the two big nations, right? Of course, you put US, you put China, they're nearly half of global GDP, 46% of global GDP. So we are seeing, we can see investment is a leading indicator as well. We are seeing that people are now waiting at the policies that is going to come out from the US and the reaction to that policies. So some discussions we're having, I mean, if I can be very honest, they're saying, let's wait and see. I mean, of course, some they already have committed, but some they are saying that, look, they want to see whether this investment is going to have the right P&L impact to them. So that, I think, is a concern. The uncertainty is delaying some decisions, and we're seeing that. Of course, we try and mitigate it, but there's so much we can do. You know, we are a small economy. I mean, as ASEAN as a group also, we try to engage. That's why the Prime Minister talked about ASEAN GCC. We're talking about our ASEAN leadership in engaging our strategic partners of ASEAN, which includes the US as well. So that is something that we need to navigate. And we also need to be clear, because we are not, if you look at some of the announcements the last 1 week, you know, I've been scrambling to see how do we ensure that the companies, especially the US companies, because the US companies exports to half of the 30-40% exports of US companies in the region goes to China, right? In the form of intermediate goods, and the finished goods will be done in China. But then you have to go down and drill down to the technology that they're exporting. Of course, the higher the technology, the more at risk that export is going to be. So for us, we need to ensure that engage the US, what are their concerns, and try to see how we as policymakers can accommodate some of that concerns. It's not going to be easy because obviously what we want to see is that the companies continue to be profitable enough to continue their existence in Malaysia, because a lot of ecosystem, a lot of suppliers who are involved in this. But we hope that common sense prevail, because at the end of the day, in theory, those decisions that have an impact to inflation, which due to cost of going up, etc., will mean that it's also bad for America. But we will see. So my point is the dangers or the issues that we are seeing today that we are worried about is people are making decisions later than sooner than later. Later than sooner. Yeah. Thank you.
Thank you.
So the gentleman in the white shirt.
Yeah.
Good morning, and thank you for taking the time to speak with us today. So I'm Corey now from Columbia Threadneedle, and my question, you mentioned earlier in your speech about execution being the primary. All these plans, if we can't execute, then what use is the plan? And the Honourable Prime Minister also mentioned human capital, and that being a main focus of his administration. So I'm wondering, over the last few years, what has changed internally in terms of building up the muscle for these really complex problems that you have to solve, particularly in technology?
Yeah. When we did the survey, what is the primary concern, apart from, stability, etc., right? Policies, is actually human capital. And although Malaysia, when you look at the availability of talent pool in certain sectors, especially in the E&E sector, it's there. But because of the growth of investment, it's been challenging to get that kind of number of engineers to come and work for those companies that have invested in Malaysia. That's the number one challenge today. It's not a big challenge a couple of years ago, but when you see this kind of investment, they need, like Intel just when they announced 2 years ago, Johan, they need about 5,000 engineers, in 3 years. I mean, we don't produce enough, they're saying, and many universities that produce engineers, not all engineers end up being engineers. Right? So there are 3 things that we're doing. The Prime Minister announced in his budget that there needs to be a bridge while waiting for our talent to come out from the universities. I think they've given empowerment to one of our agencies, MIDA. The MIDA CEO is here, where if you can justify that there is no talent, especially in the very high skilled jobs in E&E sector, semiconductor, AI, etc. Then you, under the industrial master plan, there's a few sectors that we're focusing on. If you can't find that talent, both Home Ministry and our agency will work towards allowing that talent to come in. That's number one. Number two is the industries themselves. The Prime Minister mentioned in the closed door session this morning, where we are now more proactively engaging. We have always been engaging industry, to be fair, and vice versa. But now we are more proactive, where we have programs to then support the industries. What do we mean by proactive? You know, with the help of Ministry of Finance, we'll get some funding to also encourage, give industries incentive to train those people. Because you know how companies work, right? You get incentives, they want to know. So a lot of the new incentive framework that is coming up, the scorecard that we have, put a lot of emphasis, a lot of weightage on skill grants, training grants on R&D and people. And finally, when you look at talent, at the end of the day, I think it's important to recognize that, you know, we want to increase wages as well, because we have the talent pool in Malaysia. A lot of them actually leave the country. That's why under the Industrial Master Plan, the mean average, mean average is the same thing. The mean wages is expected to go up. Well, it's targeted to go up twice by the year 2030 to 4,005. And of course, it has to correlate with productivity. So we are now putting in a lot of effort to ensure that when the companies that do come into Malaysia, companies that increase economic complexity, therefore will increase the wages of Malaysians, and therefore will then attract more skilled Malaysians to stay in Malaysia, and for those who want to study in this field are more then attracted to study in the fields of engineering, etc. So those are the three key areas, three focus when we talk about increasing talent pool and that's available for Malaysia and for our industry. Because under the Industrial Master Plan, it is important, it's a very important enabler apart from financing, etc. Thank you.
Thank you, Minister. Can I invite the next question? On the floor, over there, the lady. I'm colorblind, so I can't tell the color. So
you're colorblind, I'm colorblind as well.
Thank you, Minister. My name is...
It's okay, you can sit down.
I'm serve you water,
yeah.
Sorry.
Thank you for your time today. My name is Bahar Langward from Pictet Asset Management. I was just wondering how you foresee your future energy mix evolving. Historically, you know, your rising power demand has been paired with, you know, rising coal consumption. Your renewable energy generation is still lower than some of your ASEAN counterparts. So I was wondering, what are your ambitions in this place and in this space, and how confident are you can meet your targets?
Okay, the Tenaga CEO is here. Is he here? Oh, he's probably gone. Okay, conveniently at the right time. So under the National Energy Transition Roadmap, of course, we have this timeline and the various, milestone that we want to meet. And I think by 2050, if I'm not mistaken, we want to ensure that our renewable energy mix is about 70-30, right? And by 2030 is about 35%. And where are we today? If you look at what availability we have on green energy, and it's about 70 to 18%, which include clean energy, in this case, gas. So where we have also committed that there's no more renewals for now for coal power plants. And we know that this is not easy to achieve. Why is it not easy to achieve? One is because it's costlier, it's higher costs. And companies themselves, although have their net zero targets, sometimes want to ensure that their costs don't go up. But more importantly, in a country like Malaysia, there's a big group of consumers who are too used to be paying a low electricity tariff. So when you want to put the renewable energy into the mix, naturally the cost will go up, right? For now, although the cost is coming down, but it's still higher than, I guess, brown energy. So that's one issue that we are going to slowly address. I think industries have already been open to having a B2B relationship when it comes to power. You have the CRESS, which is actually a third-party access agreement where companies like data centers who consume a lot of energy can work with a third-party power generator. Of course, they have to pay excess for that, wheeling charges, paying toll on the highway. People are disputing about the cost of that, but still, this is a beginning. Because Tenaga alone, you can't expect one big company to achieve that desired target that we have set out. But we are committed. I think the government is assisting in any way we can. Industries also demand this, right? But for us at our ministry, we were working very closely with Petra, the energy ministry, to see what and how we can achieve this. For example, a month ago, we announced the power utility efficiency for power generation for data centers that hopefully will make it more efficient when it comes to energy usage. But so I think it's not easy to answer that. But of course, one thing that has been announced, which I think will help us meet that target sooner, is SMR, nuclear. I think that's our Minister of Energy has mentioned the fact that Malaysia is now studying the option of SMR or any, when it comes to nuclear SMRs, small medium reactors. Yeah. And that will help, of course, achieve the targets that we have set out under the energy transition roadmap.
Thank you, Minister.
Thank you.
The next question, please. Otherwise, can I ask you a quick question, Minister?
Yes, one last question.
Sorry. Obviously, yes, thank you. I understand. Very quickly,
the governor can't wait. Yeah.
ASEAN chairmanship. So obviously, you are, and your ministry is in charge of the economic pillar. Yes. What are some of the key priorities that you want to achieve during this year, 2025, with that role?
So yes, we are officially the chairman of ASEAN this year. There are three pillars: the security and diplomatic pillar, there's the economic pillar, and there's the social pillar. So for the economic pillar, our ministry is spearheading that. We have various targets that we will announce in February once the economic ministers sit down. We call it the PEDs, the Priority Economic Deliverables. It's important because for those of you in the room who knows ASEAN, this is a bloc. Today is the 5th largest economic bloc, growing at 4 to 5%, which is the fastest growing region. And by 2030, if we continue with this trajectory, we're going to be the 4th largest economic bloc. Population-wise, 680 million people, right? Demographic-wise, I think half is below the age of 35 or 30, I'm not quite sure now. But, it shows that, and GDP-wise, it's 3.8 trillion US. That's right. So we, under the economic pillar, we want to see this to continue to grow so that we can be the 4th largest economic bloc by 2030. But at the same time, we want to deepen integration within ASEAN member states. There's 10 countries who are member states of ASEAN, one hopefully soon, which is Timor-Leste. But if we can do that, I mentioned briefly just now that even the trade within ASEAN countries is only at 28%. That's right. So there is a potential to increase that, especially today in light of some concerns about in relation to trade tensions. ASEAN itself should continue to work closer. That's one is our Digital Economic Framework Agreement, which will then allow companies to be more involved in trade, e-commerce within other countries in ASEAN, making it simple for payments, making it simple to market their goods across the 680 million population. And at the same time, we are also looking at ASEAN centrality, talking about how ASEAN should upgrade their trade and investment relations with other nations. That's why we hope to conclude the second upgrade of our trade and investment and goods agreement with China. I think we're nearly there. And in India, we want to substantially conclude some of the key issues relating to trade and investment. And then the Prime Minister talked about energy just now. We're talking about ASEAN Grid. So together with the Ministry of Energy, we want to talk about having a strong ASEAN grid, especially tapping renewable energy to countries that require it. And finally, I think what's very important is the fact that for the economic pillar, we want to ensure that the growth that's achieved by member states is a growth that is win-win. It's not that winner takes all. It's not a zero-sum game, right? Because we want to ensure that with the growth that is more inclusive, then we can ensure that the peace and stability that ASEAN has achieved thus far remains so, right? So because at the end of the day, like it or not, the trade tensions or whatever tension, geopolitical tension, is driven by economic interests. I mean, you know where US stand today, is because they feel that US is at a disadvantage with the trade deficit, with the jobs of American citizens. Similarly for ASEAN. So this economic pillar must show that ASEAN, the members of ASEAN state, the people in ASEAN benefit economically from being members of ASEAN. So those are the...
Thank you, Minister. I appreciate you've got a tight schedule. Perhaps one more question from the floor, if, or no?
Okay, one more.
Sorry.
I have to go to the...
Okay, maybe.
Go to Parliament.
All right, never mind. Fine, I apologize.
Very
quickly, just to summarize, you talked about political stability, Malaysia being able to take long, hard choices, look into the future, big decisions that we're taking, real reform, and obviously, understanding that we're a small, open economy, so engagement is critical. But net, government's also aware of some of the key issues that we need to surmount, talent, etc. So in summary, I suppose Malaysia is still, a hotbed, potential for investment, etc. But there will be challenges to navigate.
Yes.
I'll leave the last word to you.
Thank you. Yes, that's a good summary. I know there's a lot of you here are capital market investors, right? And in the afternoon, we're going to be meeting the companies that focus on FDI and also focus on imports of Malaysian products, especially with the CPTPP that came into force with UK on 15th of December. There's a lot of potential trade flows between both countries. So for those of you who are here today, I mean, Dato'Seri Wahid, Chairman of Bursa, talked about the strength of our capital market. You passed the 2 trillion market cap recently, and you can see more, hopefully. But what's important to me is that the policies that we have announced translates into the outcome that we want to have, right? Sometimes we tick the box by saying we've done it without seeing what the outcome is. So today, for this government, the Prime Minister put a lot of focus on ensuring that whatever policies that we have announced translates not just into action, but also into outcomes. So that's all. Thank you.
Thank you very much, Minister. Thank you, everyone. Thank you.
Ladies and gentlemen, I hope you've gained valuable insights into the way forward for Malaysia, and thank you all for your questions. So we've come to our final session addressing Malaysia's macroeconomic strategies, fiscal and monetary policies in the evolving global context with Datuk Johan Mahmood Merican, Secretary General of Treasury, and Dato'Seri Abdul Rasheed Ghaffour, Governor of the Central Bank of Malaysia. This session will be moderated by Michelle Chia, Head of Research, CIMB, Treasury and Markets. Please.
Hi, ladies and gentlemen. Good morning and welcome to the second Fireside Chat. My name's Michelle and I'm honored to serve as your moderator for today's discussion. So as the Honourable Prime Minister set out in his keynote address, the global landscape has never been more dynamic or uncertain, marked by geopolitical tensions, rapid changes in market dynamics. Now, at the heart of navigating all these challenges lie the coordinated efforts of policymakers, homework which the Prime Minister has explicitly said fall on the laps of these gentlemen sitting next to me. So I'd like to introduce Datuk Johan Mahmood Merican, Secretary General of Treasury from the Ministry of Finance, as well as Dato'Seri Abdul Rasheed Ghaffour, Governor of the Central Bank of Malaysia. And I hope today's conversation, this Fireside Chat, really tries to explore how these two critical institutions collaborate as well as balance their respective mandates to maintain the strong stewardship of the economy in a time of growing uncertainty. So to set the stage of these remarks, I'd like to invite both speakers to share what really occupy their policy chessboards, and how they're able to influence outcomes and deliver the sort of sustainable growth and long-term reform, structural change momentum that Malaysia hopes to achieve. I'd like to invite Dr. Johan first to share his slides.
All right, okay. Hi, very good morning, ladies and gentlemen. Thank you, Michelle, for the introduction. So allow me just to run through, just from the Ministry of Finance perspective. First, maybe just to introduce, I think you've heard a little bit from Prime Minister Anwar Ibrahim and also even Minister Zafrul with regards to the economy Madani framework. And let me just put it in a perspective in terms of 3 pillars. And one is really in terms of this commitment to reform, which you've heard from the Prime Minister, very much anchored in terms of reforms on governance and also fiscal. The second one, if you heard part of the economy Madani, is this sense of raising the ceiling, which is very much a drive towards quality growth. And then third is in terms of raising the floor, which is to ensure that the prosperity generated is enjoyed inclusively. In terms of the reform agenda, the Prime Minister 2 years ago came in on a platform of combating corruption. There have been many reforms undertaken, strengthening the Parliament as an institution, as check and balance, parliamentary or legislative changes, even to strengthen the function of audit to follow the public money. And in terms of, you've heard also about, in terms of what he meant about reform on fiscal, this included, for example, in the public delivery system, transition, especially on government procurement, ensuring that we move away from direct negotiated towards open tenders, and also in terms of rationalization of agencies. And the rationalization of agencies is not just in terms of trying to reduce fiscal costs, but very much in terms of also how to improve the public service delivery system. In fact, one of the initiatives taken up under Minister Zafrul was a consolidation on our investment promotion agencies. Currently, we have more than 20. Increasingly, earlier had the MIDA CEO. How do we ensure that we have at least a single point of contact, especially in terms of engaging investors, particularly in this increasingly competitive environment with global uncertainties. And I think the other one, is, especially in this space, is just also the rationalization towards ensuring that we're more competitive and in terms of focus towards ease of doing business. The last on this is really in terms of fiscal reform. And you've heard also from Minister Zafrul, where for quite a while, actually, in the Ministry of Finance, we've had this idea of a Fiscal Responsibility Act, FRA commitment. The draft has been sort of loitering around in the corridors of the Ministry of Finance, but not many ministers want to cede power to the Parliament. And obviously, this is part of the commitment of the Prime Minister. Coincidentally, he was also Minister of Finance in the 90s, and it was only back when he was Minister of Finance in the 90s where he actually had a balanced budget. And so part of this is this commitment towards the medium term, where we have a commitment in the medium term to achieve deficit of 3% or lower, debt of 60% of GDP or lower, and also financial government guarantees of 35% or lower. In terms of raising ceiling, in terms of quality growth, I mean, you've heard a little bit already from Minister Zafrul in terms of driving the National Industrial Master Plan. We're working obviously very closely between the Ministry of Finance and MITI, Ministry of International Trade and Industry, in terms of having a new incentive framework. And Minister also mentioned this idea of a scorecard to ensure that our incentives are linked not just to a value of investments. Even the Prime Minister spoke about, we're now very attractive for data centers given our competitive cost of electricity and water. What we want to ensure is that if they come in, it must be also linked with value add, whether it's linked to AI, whether it's linked to local supply chain spin-offs. And hence, in Budget 2025, one of the announcements was this new scorecard or framework for ensuring that the incentives are correlated with attracting quality investments. NETR is the Energy Transition Roadmap. There was also an earlier question on renewable energy. Even next year, you even have like 2 GLCs, even between Tenaga and UM Lestra, is about 16 billion investments, both in terms of solar and also in terms of upgrading the grid. In fact, end of 2024, the government has already just awarded 2,000 megawatts worth of solar, large-scale solar, and there'll be additional 2,000 coming out in a new tender in 2025. Gear Up is a program being led by the Ministry of Finance, really in terms of optimizing, in terms of our government-linked investment companies. And today, you will be able to meet with some of the heads, or whether it's our Khazanah National, in terms of PNB. One of the focuses of government also, as we do fiscal consolidation, one way in which we then also ensure that we also have optimizing on the resources that we have, is also then to look at the strategic asset allocation of our GLICs, and also getting a commitment towards a more focus towards domestic direct investment, particularly to support the strategic growth areas. Last on the right is really in terms of raising the floor, ensuring that the growth that's generated, quality growth generated, is also enjoyed inclusively. Some of the reforms being undertaken by the government on labour markets, raising of minimum wages, which takes effect in February, social protection reforms, including government pension is being transitioned from a defined benefit to a defined contribution, and also in terms of widening the coverage of the social protection towards informal sector. You've heard also from Prime Minister, the government's focus, particularly towards health education and basic infrastructure. And part of that also to ensure there's inclusive growth also in terms of geographically. And that includes, as what was mentioned many times, and has its linkages also with the ASEAN region. Obviously, the Johor Special Economic Zone is to optimize and build on those linkages with Singapore. There's a big, more than 10 billion new allocation for roads in Sabah. That also benefits perhaps also linkages with the new capital in Indonesia. And also Prime Minister spoke about border development to the northern border with Thailand. So of course, coming from the Ministry of Finance, obviously one of our key focuses is on fiscal policy. The Prime Minister, as mentioned, also our Minister of Finance, he's perhaps dispensed with the typical playbook or script for our budget speech and dispensing with the populist tone. In fact, for the 3 budget speeches that he has presented to Parliament, Budget 2023, Revised, Budget 2024 and Budget 2025, he just starts off with a very realistic sort of tone of saying our debt and deficit levels are unsustainable, and therefore we have to increase taxes and also optimize on our expenditure. We will focus particularly in terms of transitioning away from blanket subsidies. And with that, you've seen that under 2022, obviously under the previous government, we've consistently bringing down the deficit from 5.5% down to 5%. The target is 4.3% for 2024, but actually we expect to get closer to 4% based on our latest estimates. And next year, below 4, currently targeted at 3.8, but again, we look forward to seeing whether we can improve of that towards achieving our medium-term target under the Fiscal Responsibility Act of 3%. That's a reduction in terms of percentage GDP, but we also want to ensure that it's also a reduction in absolute numbers. So in terms of our annual borrowings, reduced it from 99 billion down to 93 billion, 85 billion, and next year 80 billion. We're obviously having also a balance. I think there's also a question earlier to the Prime Minister, how do we find that right balance between fiscal responsibility and growth? I think the plan really is to have, setting out through the FRA, a commitment towards a medium-term target, but then ensuring that the rationalization or the consolidation of our fiscal deficit is done in a gradual and measured manner to ensure that we still have sufficient fiscal support to ensure that the growth momentum is duly maintained. Talking in terms of unpopular measures under the current Prime Minister, in 2024, the various tax measures introduced, the sales tax on low-value goods, capital gains tax, obviously here it's a norm, but this is relatively new and also quite unpopular, introducing capital gains tax in Malaysia, e-invoicing to improve in terms of tax compliance, excise duty. But notably for 2024, the main one was raising the tax rate for service taxes. We had initially estimated a 3 billion uplift, but by the end of 2024, it's closer to more than 5 billion that has been able to be collected due to the higher rate and larger coverage. Next year, we've announced a further expansion of our sales and service taxes, where we also estimate around another 5 billion additional revenues from the enhancement sales service tax. But we've also introduced new taxes, like imposition of a top-up dividend tax, and also a plan to also introduce carbon tax by 2026, particularly in terms of high carbon emitters. That's in terms of revenue enhancements. In terms of subsidies, again, I think there was also a question to the Prime Minister. So the Prime Minister is very committed to move away from blanket subsidies. Electricity was one area we started off with. In 2022, when fuel prices were going up, the previous government had chosen to maintain electricity tariffs and not pass through the energy costs. And that cost over 20 billion ringgit. And what we found was that the top 15 largest consumers of electricity were consuming almost half of the subsidies. And so what the current government did in terms of, again, what Prime Minister talks about, a pragmatic and measured approach. We first started releasing the subsidy from the large corporates. That was in the first half of 2023. Then in terms of subsequently in terms of large domestic consumers and so on, achieving a 4 billion saving against, by then the lower price was about 10 billion subsidy. But it also meant that we are still able to protect the poor and lower income while basically releasing the subsidy or removing subsidy for the corporates and larger consumers. Other subsidies have been removed, such as there was previously under the previous government, there was a subsidy for food such as chicken. And we also earlier in 2024 were able to get cooperation with all state governments. And as you know, some states in Malaysia are not of the same political party as the federal government, but we were able to achieve this consensus to increase water tariffs earlier in February 2024, which for some had not adjusted for more than 2 decades. And next year, and then in mid of 2024, we introduced also a diesel subsidy rationalization, where we initially were expecting only about a 4 billion savings, but right now we're clocking at least $500 million a month. And the next big plan for this year is obviously by mid-year petrol subsidy rationalization. So you can see that the commitment is really to move away from blanket subsidy by doing it in a measured and sequenced manner towards our fiscal reforms, and also to create those fiscal buffers in the event of any need. This is a slide on growth. I think in macroeconomics will be covered more by Governor Rasheed. I think you can see that particularly in terms of 2024-25, we still have a strong growth momentum. Again, I think the role of Ministry of Finance to ensure that the fiscal policy remains supportive of growth. So whilst we're reducing the fiscal deficit in percentage terms, it's still mildly expansionary in terms of the total budget allocation has increased from 407 billion to 421 billion next year to ensure that it's supportive and also ensure that there's also a strong emphasis on domestic consumption. This ties in with in 2025, where the government has revised civil service pay and also introduced a higher minimum wage as well to support the domestic consumption. This in terms of ensuring quality investments. As I mentioned, part of it is how to ensure that the incentives are aligned with better quality of investments. The scorecard, which is introduced, it was a collaboration between Ministry of Finance and MITI to tie in the higher incentives to be linked to 6 parameters. One in terms of the complexity, job generation, linkages to supply chain, sustainability, and so on, to ensure that, again, the focus is not just on large investments at once, which really create more spin-offs for the domestic economy, including for regional balance. Maybe since there was a question, but it was mentioned particularly on renewable energy, notice that, again, there are major solar farms. As I mentioned, 2,000 megawatts was just awarded, with another 2,000 due to be tendered out. Kenye Floating Solar is also another initiative by the government to work on a collaboration with Petronas to develop hydrogen. And then on the right, hydroelectric is something that's predominantly in Sarawak. And you've heard also from Prime Minister how it plans to basically, by submarine cable, to transfer it to Peninsula and also sail to Singapore. We've also plans to also link with linkages to also Laos and Vietnam. Won't talk too much about private investments because I think you've already heard from Minister Zafrul. The next I wanted to mention was really in terms of our GLICs, our government-linked investment companies, this idea about how do we then get them to commit more in terms of domestic direct investments. So collectively, there's a commitment of 120 billion of investments over the 5 years in domestic direct investments. This is in addition to their normal 440 billion, which they're going to basically go into public market investments. This also is one of, I think, Malaysia's strengths, that we continue to have sufficient domestic liquidity that can even support also the financing of our deficit. But in terms of the domestic direct investment, some of the focus areas, for example, Khazanah National, part of that domestic direct investments will be, there's a Dana Impact Fund which has been launched, includes in the E&E space, how do we create more domestic linkages? We have probably the full Rolodex of Silicon Valley, of E&E multinationals in Malaysia. How do we then create those linkages to more SMEs and startups to really build up that value chain in Malaysia? Co-op, for example, has just also launched a 6 billion ringgit Dana Pemacu, which is effectively a partnership between international GPs, which has also just been recently awarded beginning of this year in partnership with local GPs. Likes of PNB, when we talk about modernizing local industry, I believe there's also CIMB present in terms of how do you then leading the charge of automation and mechanization in the palm oil sector. And I think ministers will talk about digitalization. I noticed in the crowd there's also the CEOs of Telecom Malaysia and also Axiata, so I think you can also get from them in terms of the digital direction, in terms of 5G, and also in terms of on expanding telecommunications. I just close basically in terms of highlights of Budget 2025. It's very much consistent with the overall framework of the economy Madani in terms of one, about reforms. And again, Prime Minister's, I think, impatient to drive in reform, particularly in terms of fiscal and governance to ensure that there is meaningful change during this administration, and raising the ceiling or revitalizing the economy to ensuring that there's quality growth and investment, not just in terms of attracting large FDI, but also promoting domestic direct investments, including down to the small and medium enterprises. But last and not least, obviously, ensuring that growth also is inclusively benefiting also to then support domestic consumption as a key lever for domestic growth, and continuing to invest fiscally in terms of basic infrastructure, health and education. Okay, I think that's all for me. Thank you.
Thank you so much, Johan. So I think this is really interesting in the sense that we've seen sort of the 50,000 feet view that the Prime Minister has given about the direction of travel. We've heard from the prior session, the Honourable Tengku Zafrul mentioned the strategic areas in which we're trying to crowd in investments, take advantage of dislocations across the region, and sort of withstand the shocks that are likely to come and come out better off. And I think with this session, we're starting to see how this bleeds into implementation, execution, the really granular details that I think investors in this room want certainty of, to be able to say, okay, I see the road, I see the runway to actually execution for that sort of confidence. And so I'd like to take, I guess, perhaps us back to a bird's eye view, because in order for this to come through, in order for Malaysia to screen well with investors, no small burden obviously falls on the central bank to ensure that there is that macro stability at play. And so be very keen to hear from the governor, how do you see that chessboard of yours, and what are the sort of risks that constantly keep you up at night? What are the sources of strengths that Malaysia has in order to see through these stages of reforms? And thank you, Governor.
Thank you, Michelle. Thank you, Dr. Johan, for giving a very good overview of the economy and also in terms of the policy. Thank you, everyone, for being here today. Let me just share some insights in terms of on Malaysia's economic landscape and also prospects. I want to start with an overview of the Malaysia's economic stability, economic landscape. I believe our economic stability is actually anchored by strong fundamentals, and this is due to our track record of carefully navigating the ever-changing global economic landscape and consistently reinventing ourselves to transition to higher value-added activities and sectors. And today, the economy is highly diversified with multiple engines of growth, and we are confident to say that the economy is currently firing on all cylinders. This makes for an agile and dynamic landscape for growth as we go forward. Malaysia's vibrant financial markets are also one of the most vibrant in the region, with deep and liquid markets that actually complement our robust financial system. Our external sector has also been strong. While we have been successful in creating a sound domestic economy, we recognize that Malaysia, as with other economies, would have to adapt to the challenges posed from external uncertainties. Therefore, it is paramount that we are able to tap on global demand through quality product offerings. I think Minister Zafrul touched this morning about this, and including on the highly diversified nature of our market. And over the years, we have actually been able to reduce over-dependency on a single economic sector and also specific trade destination, and thus able to mitigate the risk associated with market fluctuations. With the diversified economy providing us with the multiple engines of growth, over the past decade, the Malaysian economy grew on average by 4.3%. And this, if you look in terms of where it is, it does surpass the ASEAN countries, which growth average about 3.6%. Despite the external headwinds, Malaysia's economy continues to be highly resilient. In fact, we saw a pickup in economic momentum and even revised our earlier 2024 growth estimates. Initially, we estimated growth to be between 4 to 5% at the beginning of last year, but as we see the first 3 quarters, growth has been very forthcoming. In fact, the first 3 quarter growth recorded about 5.2%. And for last year onwards, I think as a whole, we believe will be in the within 5% growth. One important point I want to highlight is that the robust domestic demand has actually safeguarded our economy against external shocks. A cornerstone of this domestic demand is really Malaysia's strong labour market and income prospects. Malaysia has one of the most stable and lowest long-term unemployment rate of about 3% compared to the ASEAN median of 4.5%. In fact, you look at the latest unemployment data as of November, it's at 3.2% and it's lower than the level that we record during the pre-pandemic of 3.3%. Hence, to investors in the room, Malaysia presents a wealth of opportunities, and the return on FDI between 2021 to 23 averaged about 12.8%. And it's higher than what we saw between 2015 to 2019, which was at 10.3%. And this level is notably higher than what we saw at the ASEAN rate of return of FDI, which averaged about 7.7%. And similarly, the domestic bond market also recorded steady inflows from foreign investors, amounting to about $5.5 billion in 2023, compared to an average of about $3.5 billion between 2020 and 2022. And looking ahead into 2025, we are projecting GDP to grow between 4.5% to 5.5%. And this is underpinned by similar drivers that lifted the 2024 growth. And allow me to elaborate on these drivers. I'm going to go a bit more deeper here, just to share in terms of the perspective and also the drivers of growth for the Malaysian economy, as we saw last year, and what will take us through into this year. First, on consumption. Consumer spending remains a key engine of growth, supported by further wage expansion and also employment growth. This year, consumer spending is expected to improve, and this is driven by sustained labour market conditions, sound household balance sheets, and also the targeted policy measures are still there. All this will raise the income of households. And investment has also been strong. In fact, 2025 marks the 3rd year investments entered into a strong phase. This is expected to be supported by new and continued implementation of the multi-year projects, especially in E&E. We heard from Minister Zafrul just now, renewables, ICT, and also infrastructure. And furthermore, there is also an additional impetus to investment coming from national level strategic master plans, has been shared earlier by Datuk Johan. And this is actually a deliberate strategy by the government to attract high quality investments into the country. And collectively, these factors are driving the ongoing investment upcycle in Malaysia. This will also bolster productivity gains in the country. On Malaysia's external performance, the baseline projection is for exports to remain favorable this year, driven by steady global and regional demand, the global tech upcycle, and an increase in manufactured goods and commodities. The tech upcycle is projected to be driven by the replacement cycle of consumer electronics and the widespread usage of emerging technologies such as AI and also autonomous vehicles. Our well-established position in the global E&E value chain that presents us with a strategic opportunity to leverage on the recovery in global semiconductor sales, notably in a few areas, particularly the logic chip segment, which account for almost half of our semiconductor exports. I think sure we have heard disconcerting noises about trade actions and also possible frictions in movement of technology. But the fact of the matter is that in Malaysia, we have global production hubs serving a swathe of global multinationals. The production ecosystem here has proven to be resilient and nimble to multiple shocks in the past, for example, during the Trump 1.0, during the global shipping disruptions, and also to the volatile currency movements that we experienced the last 2 years. And to date, we are seeing healthy order books and investments intentions, which augurs well for our 2025 prospects. One last thing about our external sector is that travel receipts are expected to increase further, and this is driven by higher tourist arrival and also spending per capita. And additionally, Malaysia's ASEAN 2025 chairmanship this year and visit Malaysia year next year are also poised to further benefit Malaysia's tourism sector. If you look at the number of tourist arrival between January to November last year, we recorded about 22.5 million, and this is much higher from what we saw in the same period in 2023, which is about 17.8 million. Of course, we have not surpassed the pre-pandemic level, but in terms of spending, we have actually surpassed the pre-pandemic level. Let me move on to the crux of the issue in terms of the monetary policy. Macroeconomic stability, a strong, stable financial sector, as well as sound policy making have been actually the essential point in supporting Malaysia's economic development journey thus far. At the central bank, we aim to conduct monetary policy that preserves price stability and supportive of sustainable growth of the Malaysian economy. Of current relevance is that it's creating a conducive economic environment for successful reforms to take place, what has been shared by Dr. Johan just now. And we welcome the government's continued affirmation to subsidy reforms as we rebuild our fiscal space and revamp government spending. Let me address concerns on impact of subsidy reforms on prices. We have seen this in the past. We saw the price increase to be temporary and is transitory. By our estimate and forecast, this will again be the case, and this is reflected in the wider inflation forecast range of between 2% to 3.5% we projected for this year, which captures the temporary upside impact from these potential reforms. And all this I've shared on our macroeconomic stability and prudent policy framework have also garnered Malaysia a favorable sovereign A rating by agencies like S&P and Moody's for over 2 decades. Let me touch briefly on our financial sector. It stands on a solid foundation supported by sound banking and financial system and characterized by well-capitalized banks with strong liquidity buffers and also healthy earnings. This resilience enhances their capacity to facilitate lending activity and also absorb unexpected losses. In fact, their strength has been the strongest point that supports corporates, companies, SMEs, and also individuals during the pandemic period. Malaysia also offers a unique value proposition for investors looking to have exposure in Sharia and ESG compliant assets. Malaysia maintains its position as a market leader in Sukuk and Islamic assets, showcasing cutting-edge financial products such as the world's first exchangeable Sukuk and also green Sukuk. Let me touch a little bit on the exchange rate. The ringgit has continued to gain strength, further increasing the appeal of Malaysian asset. In 2024, the ringgit appreciated by 2.7%. This was touched by Wahid earlier on, against the US dollar, and was one of the best performing currencies within the region. On a nominal effective exchange rate basis, comparing to our trading partners, the ringgit strengthened by 7.8% last year. And if you look at this year, despite the year-to-date, as at 13 January data, depreciation of about 0.7% against the US dollar, prospects for the ringgit remain positive, given the robust economic growth and also consistently healthy external sector that we have. And globally, while the monetary policy path shifts towards central bank easing, it is important to acknowledge that financial markets remain still susceptible to economic developments, including the shifting growth prospects and any divergence between market participants' expectations and also central bank actions. And other sources of volatility also remain, including the undercurrent of geopolitical tensions, which continues to bear weight on investor sentiments, and more recently, the policy uncertainties in the global operating landscape and policy uncertainties. All these have also led to some pressure on regional currencies, including the ringgit. But nevertheless, given the Malaysia's strong and positive growth prospect, as well as sound economic fundamentals, this will continue again to be our best shock absorber and to lend support for the ringgit. We are, of course, vigilant of potential risks arising from the uncertainties surrounding global growth and also ongoing geopolitical tensions. We therefore stand ready to manage any excessive pressures on the ringgit if needed. Touching a bit on our coordinated actions, it has led to actually positive ringgit outcomes. We know our actions can be effective Last year, for example, the ringgit was under depreciating pressure given the change in market expectations of the US Fed policy cut. There was earlier part of last year. But to manage this cyclical pressure on the ringgit, the government and Bank Negara Malaysia, we took several coordinated actions to encourage consistent flows into the forex market. And this include encouraging timely repatriation and conversion of foreign investment income by the GLCs and GLICs, stepping up our discussions with corporates and exporters to convert their proceeds and also overseas investment income into a more consistent and timely manner. And we also introduced a pilot qualified resident investor program. And this arises from our engagement with the corporates and investors. They want to be assured that, I think, if they were to go out again after they convert their income into ringgit, there's flexibility and there's fast track for them. So what we have done is that we have created a fast track pre-approval framework that eases the process for resident corporates to repatriate and also convert foreign currency funds from overseas investments, as well as to facilitate reinvestment abroad in a timely manner. And these coordinated actions have actually helped cushion the pressure on the ringgit through improved liquidity intermediation in the domestic financial forex market. We've seen evidence by the higher daily forex trading volume increased to about $18 billion on average per day, as compared to what we saw in the past of about $15 billion. Let me summarize. I have spoken about our growth journey and what we will do next in regards to more reforms. We acknowledge that there will be some trade-offs, mainly in the short run as we restructure the economy. However, we are coming from a position of strength. Our growth is strong, our inflation is stable and low, and our external position is healthy. The era of economic transformation is really upon us, and Malaysia is embracing it with open arms. We are not merely adapting, we are elevating our game to a whole new level. Let me pause here. I think both myself and the Secretary General, I will be happy to take questions from the floor. Thank you.
All right, thank you so much, Governor. So we've given both the fiscal and monetary authorities the opening remarks, and I think this is where perhaps we try to press on issues that matter from the eyes of investors. And perhaps, let's start off with this position, which is the Prime Minister has said it's a tough balancing act to try to raise the ceiling and the floor at the same time. Even in corporate restructurings, doesn't go smoothly. This is trying to change a country on a national basis with a clock running down the time. And so this is my question to you, Johan, which is, in balancing this need to be fiscally responsible, as well as providing the backdrop for these growth initiatives, strategic investment plans, and in your position as the arbitrator or an arbitrator of fiscal resources at the Treasury, how do you grapple with this dilemma between efficiency and societal equitability, given that it's a central pillar of the Madani economy framework?
Okay, thank you, Michelle. I think as what I think what the Prime Minister had explained and what I hope to also had communicated, the government, and particularly in setting out the Fiscal Responsibility Act, has set out basically a medium-term target where we want to be in the medium term. And once we set out this commitment, and under the Fiscal Responsibility Act, if we are not going to be on track to this target, we have to go back to Parliament. So it really is a very credible commitment made by this government. So once you set out that marker, it's already announced, we have no choice but to deliver on it. And hence that's why the Prime Minister said, there's no compromise to having that discipline. But given, we still face, continued, uncertainties, in terms of geopolitical and whatever potential trade tensions, it's then been quite a deliberate approach to be quite measured. Obviously there's some which, sometimes we get remarks, why aren't you being more aggressive in reducing your deficits? But I think, we've set out the target, and then therefore we then first it's gradual. So I think that, in a sense, is what Prime Minister is saying, that I guess is also able to provide the more broad-based support to this reform agenda. And I think at the same time, there is also this optimization. I think Prime Minister spoke about now, this focus on tender, so hopefully we're still able to achieve those investment and outcomes for the people, even within this, increasingly, rationalized or consolidated fiscal space. I think that also helps. And I think even in the way that the subsidy rationalization has been implemented, one of the, I guess I think politically, obviously, the government has chosen to say, rather than talk about subsidy rationalization, we use the term subsidy targeting. And the point which was made again by the Prime Minister, it doesn't make sense to have blanket subsidies which also benefit the rich and large corporates. But obviously, there's still a role for government to help address the poor. Now, whilst traditionally, economic theory would suggest let's just float market prices and then try to do some form of cash assistance, the government has taken this approach of tiered pricing. So, for example, for electricity, as what I explained, what the government had done first was effectively, I guess Prime Minister, for those who know him, is a real champion of social justice and takes a very progressive approach. So again, as we released or removed the subsidy, we started off first with the large corporates, a bit less on the SMEs, and then also the large home or domestic users. So whilst then safeguarding the tariffs that were still charged to the shall we say, the lower end or masses, the lower consumers of electricity. That again was mirrored in terms of the revision of the water tariffs. And again in diesel, when we again floated the diesel prices to market prices, we actually created a tiered price for logistic companies to still be able to buy diesel at the subsidized price in order to ensure that there wasn't a knock-on to, for example, cost of living or price of goods. And I think that's part of the reason in this, shall we say, policy design, that it again has enabled the government to release subsidies while still ensuring that the knock-on impact on inflation is relatively contained. So as what you've heard from Governor, it's still around the 2% neck of the woods. So I think that helps in the, I guess, the manner in which this, shall we say, unpopular policy measures are being undertaken, that it's undertaken in a measured way and also in a way that still tries to safeguard at least the shall we say, the poorer or the lower income masses.
Thank you. And I guess maybe this is as a follow-on question to the governor himself, which is that I guess the more measured and gradual pace of these policy reforms, including on the fiscal side with regards to administered prices, has been well coordinated with monetary policy stance. In a sense that, if you take a look at Malaysia's macro backdrop, we're in a bit of a sweet spot, if you would agree, right? Strong growth momentum, we're in the 5% range, inflation expectations well managed. I think if you gave those sets of cards to a lot of central bankers around the region, they'd take it in a haste. But that's also what you're responsible to protect. And so in this environment where you have these progressive reforms being rolled out, at the same time, all these external challenges kicking in where you really don't have the visibility of when those shocks will come. If you would allow me to play devil's advocate, how do you as a central banker, how do you as a determinant of that monetary policy response manage all these different factors while also having to decide which tool is best utilized? Monetary policy, liquidity operations, the exchange rate, which I know will come up as a question as well. But, how do you grapple with shocks that you can't see until they're much closer in the light of it, in the line of sight?
I think you are right. I think in undertaking reform, I think what's really important is to ensure that we have stable macroeconomic conditions. I think that's a precondition to it. So that is why I think in terms of monetary policy objective is that we want to provide a conducive environment for reform to take place and for reform to be successful. So that's very critical. So that's what I think the approach that we have taken. And I think in terms of from the tools that we use, from monetary policy perspective, from ringgit perspective, exchange rate, or even from financial policy perspective, from monetary policy perspective, the main objective is really in terms of ensuring that we have monetary stability, and we experienced that last year. And inflation was stable at about 1.9%, and I think we'll end up below 2%. Similarly, this year as well, I think that will be the objective that we want to maintain in terms of anchored inflation and also in terms of stable inflation. We want to have price stability, but at the same time, sustainable growth that we record. So this is where I think in undertaking monetary policy, what's important is that how do you balance the risk of prospect of inflation to growth, taking into consideration all the reform measures that's being undertaken by the government. So that's from the monetary policy perspective. From ringgit perspective, under this environment as well, not just because of the reform, but also the global environment that we have, that we face, we need to also ensure that I think there's an orderly functioning of the financial markets and that we are able to manage excessive volatility and we ensure that there's sufficient liquidity in the market. So that's the aim that we want to have. Financial sector, we want to ensure there's continued stability there so that the financial sector can play their role as intermediation to provide financing and support economic transition and support economic growth. But having said that, we will be agile in calibrating our policy and remain focused to ensure that we provide conducive environment in terms of monetary stability, in terms of financial stability, that could provide sustainable growth for the country. So that is what I think we will do. But looking at our past track record and our previous experience, this kind of policy-induced measures like reform and the rest, the impact on price stability will certainly be there. But this is normally transitory. And what we normally do in such cases is that we will look through the circumstances, the situation, and we'll see what are the driving factors that's pushing up price. If it's due to the policy reform, then of course I think this is transitory and will go away after 1 year. Whereas monetary policy works with the lag, and we take a longer-term perspective between 6 to 8 quarters. So that's what I think monetary policy may not be the most appropriate tool for us to manage if there's price changes as we undertake reform measures. Thank you.
Thank you, Governor. And so I think I'd like to take this opportunity to open the discussion to the floor, and raised hands will be met by mics. Okay, thank you.
Thank you. Thanks very much for the comments. Yeah. My name is Vikram Mathur. I'm from Schroders. So just on the RON 95 rationalization, I think last year the government was quoted in saying that a very high percentage of the population will still have subsidized RON 95. I think it's 85%. Is that still the intention, and how much cash will that actually free up at a budgetary level? And then secondly, what's the sort of plan going forward for different phases? Will that percentage of population fall further, or what's the plan?
Okay, thank you for the question. So I think just like in our experience with electricity and also diesel, significant savings can be achieved if you remove subsidies for large corporates and the higher income. So based on our statistics, when you look at what's the consumption profile of the RON 95, when we look at B40 and M40 households, just using those categories, we find that their consumption of RON 95 only accounts for 56% of the total RON 95 consumption. So effectively, the government is able to then achieve more than 40% savings if we're able to then effectively just remove the subsidies for the, shall we say, the higher T20 and also the commercial and other users of RON 95. So that commitment again was trying to be premised again, trying to mirror what was done for electricity and diesel to try to introduce a sort of tiered pricing approach where the 85% continue to benefit from subsidized prices, but then to float to market for the other users. And so the 40%, of course, depending on where oil prices are, and obviously recently we've seen an uptick, right? But if you take between 70 to 85 US dollars, the range is probably between at 5 to 8 billion sort of range in terms of potential savings for RON 95. In terms of how it progresses from then on, obviously probably a bit too early to comment on that, but what you've seen for electricity at least, so you see when we first introduced the gradual targeting of electricity subsidies, first we removed it for the large corporates. Then we then started increasing the tariffs for home users who are using more than 1,500 kilowatts. That was in the second half of 2023. And then the first half of 2024, we then started increasing it for those who use more than 600 kilowatts. So potentially that's something we could look at in future to take a leaf out of the way we've approached electricity subsidies.
Okay, I believe there's one question from...
Yes, thank you very much. Ivailo Vasilino from Enso Asset Management. Thank you for your, both for your illuminating presentations. I'm going to take up Michel's invitation and ask the Governor a question on his favorite topic, the exchange rate. It's actually two parts of the question. The first one would be backward-looking. You mentioned the repatriation and conversion of foreign income. So I was wondering, what role do you think this played in terms of the performance of the exchange rate last year? And would it be fair to say that the bulk of the appreciation that we saw before the final quarter was actually due to those flows? And then how much of that cushion in terms of FX deposits offshore has now been depleted? And if that's indeed the case, the second part of the question will be forward-looking for this coming year. If we assume a difficult external environment, maybe Trump 2.0, general pressure on the emerging markets, what are the contingency plans for how to deal with potential pressures on the exchange rate? Are there any plans being discussed on potential tax amnesties, any other measures that could actually help to stem that flow, especially if that cushion has now been depleted? Thank you.
Right, so if I may just summarize, I guess there are three questions there. One which is, to what extent have the repatriation of investment income helped in solidifying the ringgit's position, both against the dollar and regional currencies? Second question is how much of the offshore FX deposits have been depleted? And third question is, what are the contingency FX measures that could be called upon in the event FX markets get more volatile with some of the US, China, or trade-related policies that kick in?
Spot on, yes.
Okay, thank you.
All right, thank you. Thank you for the question. I think let me answer the first question. I think the coordinated action has certainly provided us with, I would say, stabilizing, support. If you look in terms of the ringgit at the beginning of last year, it was under great pressure. And although we know that it does not reflect our fundamentals, the fundamentals was then very strong, and the prospect for economic growth was there. So the coordinated action has been able to provide some stability to the ringgit at that point of time. So that's as much in terms of the benefits from the coordinated action. But more importantly, I think what we believe is that the moment there's a shift in terms of monetary policy positions in the advanced economy, which does happen in July, so that's where you see ringgit started to strengthen. So basically, coordinated action has provided stability, and in terms of the movement of the monetary policy in the advanced economy, has provided support to push the ringgit stronger. And in addition to that, there are many other factors as well. For example, the strong prospects of growth for the country. Second is that in terms of the measures undertaken by the government, for example, the structural reforms. So those has improved investor sentiment of the country, and that has also been a catalyst to push for greater growth in the economy. And we experienced about 5% growth last year. So this has also been a contributory factor towards ringgit strengthening last year. So that's in terms of the first question. Second, in terms of the how much offshore deposit has been depleted, not really, because you know why? From the coordinated action is that is the income from the GLC and GLICs. And so this is continuous, recurring in nature. So it's not the investments, it's the income from the investments. So it's something that we believe will be continuous, and we believe it will be there. And what we did was to encourage the GLICs, the GLC, the corporates to repatriate and convert. And we make it simple for them. We make it easier for them to convert and also to reconvert again and invest overseas again in the future if they need to. So that has provided a framework that has encouraged or incentivized them to bring back the income and to convert. Similarly with the exporters as well. There's export proceeds. Although we noticed last year, the conversion was rather stable at about 65%, 70%. But what we did was to nudge them to convert, to repatriate more and to convert. And of course, we provide them some flexibility if they want to reconvert again for future use. So that has also helped. So this kind of approach has really helped us in terms of managing the exchange rate. And you would have noticed that I think over the last 2 years, although ringgit has been under pressure, but we never resort to any unfriendly market measures. We stay the course, we stay the line, we work on encouragement, we engage with the investors, exporters and importers as well, and that has resulted in a stable ringgit while waiting for the adjustments in monetary policy in the advanced economy, where it does provide further support to the ringgit. The third is in terms of what will be the strategy. I think as we face this challenging period, I have to say that we are entering this period from a position of strength. I think ringgit has strengthened. It is now hovering at 450 level, and appreciated by 2.7% last year. And if you look at the even NER in terms of based on our trading partners, it's appreciated by 7.8%. So basically, we are starting from a strong position, and we have strong economic fundamentals, and we have strong economic prospects as well, and strong external sector. So these are the factors that will provide support for the ringgit. And we also have adequate buffers. Of course, I think we have always been very diligent and I think disciplined in utilizing it. But more importantly, we do have mix of policy toolkit for us to actually use support if we need to from time to time. And what we'll do this year, we will continue with the engagement. We'll continue with the coordination action with the cliques and the GLC and the corporates, and to ensure that we have an orderly market and that we also stem in any excessive volatility in the ringgit itself. I think that's how we will do. I think we continue with the market presence, we continue with the coordinated measures, we continue the engagement, and we also explore new toolkits from time to time. But more importantly is that the ongoing investments that's coming into the country, we have seen in terms of the interest and also the numbers that's coming in, that will also provide some support for the ringgit this year and moving forward. And finally, the structural reform. This will provide the enduring support for the ringgit. Thank you.
Yeah, and of course, the inflows that are coming through from the FDI, the
Correct.
strong pipelines, that's also going to try and
Correct.
perhaps shore up the balance of payments.
Yes.
Perhaps I could invite another question from the floor.
Hello. Yeah, here.
Oh, there.
Hi, I'm Prashant Kothari from Pictet. My question is again on exchange rate, but slightly different in the sense of how do you think about the elasticity of exports to ringgit? Because if the ringgit has appreciated like 7-8% versus its kind of trading partners, then it might be causing some weakness in terms of competitiveness of exports. How should we think about that? And at what point of time would it become, let's say, unmanageable that you would actually want ringgit to weaken a bit just to keep the trade balance in a strong position?
All right. Okay. All right. Thank you for the question. We never use exchange rate to gain competitiveness of our firms. I think, in fact, in our conversation with the corporations, we said, don't rely on exchange rate to gain competitiveness. So that's where I think you need to be competitive, you need to be efficient, you need to enhance the productivity for you to gain a market share in the export market. That's number one. Secondly, in terms of while ringgit strengthen, all of the exporters, I think they also import. So basically, they will also gain from the cheaper imports in terms of producing the output. So there will also be natural hedging in terms of for the exporters as well. And so far, we have not received any kind of concerns from the exporters, given that they also benefit from the input costs, where they actually also import.
Yeah, thank you.
Thank you. Sorry, is there another question from that end? No? So I've actually got a follow-up question, because I can't have Governor...
No, there's someone.
Oh, sorry. Is there
Yes,
one?
there's someone.
Yeah, please go ahead. Please go ahead.
Yes, hi. I wanted to ask you, Governor, about, this is Tushar Podar from Wellington, your FX reserve policy. And if you want to talk a little bit about, do you have a target level in mind, or how are you intervening to build reserves? There is also intervention in the forward market. If you can just talk through your policies there. Thank you.
All right, thank you, thank you. We don't have a target reserve level. Similarly, we don't have a target ringgit level as well. But the reserve level at the current position of 116.2 billion US dollar, that is adequate by any international standards in terms of import cover, in terms of short-term external debt. So we do have adequate reserves. And as you have seen in terms of our market presence, our intervention is always prudent. and only if we need to manage any excessive volatility in the ringgit. So that's the objective of our market presence and intervention. And thirdly is that you could have seen from our track record, whenever there's opportunity, we will try to build our reserve. So that's where I think having adequate buffers is important. And during good times, we do find opportunity to build our buffer. And during times under pressure, so that's where we utilize the reserve and utilize it in a very prudent manner.
Right. Just checking it in. If there are any questions from the floor?
One, yeah.
Sir. The mics are coming.
Hi, it's me again. Just on the central bank, just for the central bank governor, where do you see the risk to inflation at the moment? I think we just talked about RON 95, and it looks like that the inflation impulse of that will be manageable. But domestically and externally, where do you see the risk to inflation?
All right. Inflation this way projected it to be between 2 to 3.5%, and this has taken into account all those reforms has been taken last year. For example, diesel subsidy, and in terms of the tax measures, and a few other rationalization in terms of electricity and also water. We have taken that into account, and we have seen the experience last year is that there's not as much price pressure. Two reasons. One is that in terms of from cost perspective, that because we also see in terms of absence of cost pressure from commodity has come down. Second, we also do not see excessive demand pressure coming in. So that's where I think inflation was stable last year, and we believe it will continue to be the same this year. But nevertheless, we have taken into account the potential the implementation of the RON 95, which may have a slightly larger impact on prices as compared to diesel. But again, I think in terms of how the policy is being designed, how the subsidy rationalization is being designed itself, I think if you look in terms of like last year for diesel, the design itself in terms of providing some kind of like exemption for certain industry, for example, the transportation and the rest. So that has managed prices. Second, in terms of the enforcement that came in with that as well, that also managed price as well. So we don't expect there to be excessive demand. There will be some demand pressure, but may not be excessive. But therefore, I think we believe inflation will be within that range. But having said that, we remain vigilant on this, and we will look in terms of if there is a demand pressure, where is it coming from? And second, how pervasive is the demand pressure, and how persistent is the demand pressure. So that's what we'll be looking into, and so that's where I think our monetary policy moving forward will be data dependent, and we will look at incoming data to assess in terms of what will be the trajectory for inflation moving forward, and also in terms of growth. Because we also want to make sure that I think we have sustainable growth to ensure that we are able to provide or to continue to be successful in our reform measures.
Okay, I realize we're coming up to the hour, so I just wanted to perhaps pivot this conversation towards, I guess, a more global and regional context. We've heard Prime Minister mention about ASEAN chairmanship taking a more regional responsibility in driving these collective solutions. So I'd like to ask each of you, in gearing up for these external challenges, in gearing up for, I guess, challenges that we haven't met and are drawing up sort of codes of conduct or mechanisms for conflict resolution. What are the critical initiatives that MOF as well as Bank Negara are prioritizing to build these safety nets and wider collective action to ensure, we're not tackling this on a bilateral basis?
I think first, before going to what Ministry of Finance is doing, I think what's clear, and you've heard it from the Prime Minister, is this approach that Malaysia has taken, which is basically to be friends with all. Still very committed to our relationships, with the West, US, and Europe, obviously, and that's committed by even the Prime Minister coming to UK's and then onto Europe, and even exploring potentially an FTA. But at the same time, really, that you see that investment on time by the Prime Minister in terms of building those bridges with China, India, Middle East, and the specific example given by the Prime Minister was, whilst, for example, China still asserts, on the South China Sea, Petronas, when it launched its mega platform on Kasawari Field, there really wasn't any issues with navy from China, whereas obviously our neighbors in Philippines have not had such a smooth ride, obviously, in terms of asserting their territorial waters. So I think that I think is very much the government's approach in terms of establishing this neutrality, trying to building those bridges with all the different blocks in terms of trying to ensure that there's trade and investment diversification. I think on the Ministry of Finance, as I think one of the key parts is that with fiscal rationalization, I think that's a key part of ensuring that we do build buffers in the event of any potential dare I say worst case scenarios that may emerge in any transition. And in addition to that, as we've also mentioned, there's this Gear Up initiative with the GLICs where in terms of their strategic asset allocation, now there's basically a coordination to ensure that there's a greater emphasis in terms of domestic direct investment, and that ties in also with the government's strategic sector prioritization. So for example, I mentioned in the electronic sector, Kazan had invested in this co-investment fund with some electronics industrialists to see what are the SMEs that we can build to ensure that I think E&E is one of those areas that we've had a 40-50-year history of E&E just like Taiwan, but we have to admit that we've not built as much domestic capabilities in moving up the value chain. So how do we ensure that we also have deployment of institutional funds to support, whether it's startups or SMEs going into, say, more design and development work. And you've seen some of the companies that, some of the electronic companies have been listed, like say Vitrox and Inari. These tended to be our electronics. These are human capital, guys who've worked in the Intels of the world for 20 years. They build up the capabilities and the networks, and then they come out and build up their own companies. I think in the past it's been very much just funding by friends and family. I think we want to ensure that we also have that institutional support that ensures that if they then come out, there's also institutional funds willing to back them. And this might also indirectly address what I think was also discussed earlier about this human capital problem, because I think actually the universities do produce a lot of engineers, but no surprises, a lot of them go into the finance sector. But how do we build that proposition? If there are also a lot of startups that also start, how can we build that pipelines of more Vitrox, more Inaris, that then it becomes a lot more interesting and exciting for engineering graduates to say, hey, I want to work for Intel, build up a track record, and then come out and have my own startup. Maybe there's another reason why we're also trying to build that institutional funding that caters from small, medium, right up to large companies, and that's why the focus on private equity, venture capital spaces as part of that strategy as well, to build up that domestic resilience.
Yeah, and it's having skin in the game, right?
Yes.
In order to make sure that the master plans actually do have this effect of not just government participation, but the crowding in of private investments as well. What about you, Governor? How do you think about using that regional network, knowing that other central banks around the region are facing the exact same problems and issues, uninvited issues that you have in trying to manage this broader macroeconomic stability?
Right. I think just to add to what Dr. Johan has said, for ASEAN chairmanship, I think in terms of addressing all those challenges, we have 3 areas that we'll be focusing on. First is sustainability, and this in terms of how do we encourage or mobilize financing to support the climate or green projects in the region, not just in Malaysia, but also in the region itself. Second, in terms of payment connectivity, I think to leverage on what we have achieved thus far, we want to push this ahead. I think we've got very good connectivity in terms of payments with a few countries in the region, Singapore, Indonesia, and Thailand, for example. You can even just use your mobile phone for QR code payment, and this would definitely encourage economic activity and the rest. So we'll push ahead on this.
Put in an advertisement for CIMB and Maybank, because they're regional banks, and now you can go
QR code.
shopping in the region using the QR codes for the respective two banks.
That's the second area that we're focusing on. Third, in terms of really strengthening our regional financial safety net, our CIMB initiative, we thought of strengthening the structure, especially the financing structure, moving towards paid-in capital. But going back to sustainability, I think I want to just share with investors here that in October this year, when during the leaders meeting, we plan to host sessions with the investors in terms of to match with the climate projects or green projects that we have in the region. So perhaps I think please block your diary. I think we'll come back with the specific dates when this will happen. We're looking forward to have you there in KL, so that I think you can see in terms of what would be the financing needs in the region and where you can come in to invest and also to finance. Thank you.
All right, thank you. And I think on behalf of everyone here, I want to extend our heartfelt gratitude to the Treasury Secretary General and the Governor for their keen insights, and to the esteemed audience for your thought-provoking questions. And I think importantly, alongside these in-person outreaches that are a very deliberate, I think, effort on the part of the Government of Malaysia, are also efforts to make market information more accessible through channels like the Invest Malaysia portal. So what I hope is that really today's plenary provides you a starting point for this community of investors to kick the tires, to crunch the numbers, to question the corporates on upside to earnings visibility, and really to show that, you know, Malaysia is kind of trying to show that we're open for business again. And so on behalf of the Government of Malaysia and the organizers, thank you for joining us at this fireside, and we continue to look forward to these constructive and open dialogues in the future. Thank you very much.
Thank you.